Inflation has come down yet again, according to the latest report released by the Bureau of Labor Statistics, or BLS, today on June 13th. In May, headline CPI dropped to 4% year-on-year, down from 4.9% in the previous month, April. This would be the smallest 12-month increase in the CPI since March 2021. On the surface, this may seem like things are getting easier for the average American consumer. Is inflation finally dying? Not so fast. In just a minute, I'm going to break down the components of the CPI that have moved up and down the most last month and show you how food, groceries, and shelter, the things the average consumer spends the most money on each month, are still going up year on year much more than 4%. Before we continue, hit that subscribe button and notification bell and share this video with everyone that is going to find this information useful. Now, the first thing to note is that given that the headline 4% CPI number is right in line with consensus expectations, traders are now pricing in a near certainty of a pause in rate hikes by the Federal Reserve this week. The FOMC meeting will commence today with the announcement given tomorrow on Wednesday. Stock market indices have opened higher across the board, with the S&P 500 up 0.7% today and the Nasdaq up also 0.7%. Markets generally prefer no big surprises, which today's CPI print didn't show. The next thing to consider is that the core CPI, which strips out food and energy, is still up 5.3%, down slightly from last month's 5.5%. Why is core CPI so much higher than headline CPI, which includes all items? Simply put, energy continues to go down, and so if you include energy in the headline CPI calculation, it's going to drag down the whole index. Overall, energy as a segment is down 11.7% year to year, with energy commodities down 20.4%. The component that dropped the most was fuel oil, down 37%. Now, I don't drive in the US, I'm based in Canada. So if you're American and you're watching this right now, comment down below. Have your gas bills actually gone down? I'm curious to know. Share your experiences with costs at the gas pumps with us in the comments below. One interesting component of energy is electricity, which has gone up by 5.9%. So what else has gone up? Now you might be thinking, hang on, 4% overall inflation is way too low. The CPI number must not be accurate because my grocery bills went up a lot more than 4% this year. Yes, exactly. That brings me to my next point, which is that food is still really expensive. Take a look at this. Food overall is up 6.7%. Food at home, meaning grocery items, are up 5.8% overall. And if we break down this list, we see that some of the items that we consume the most often are still up year on year, much higher than 4%, which is the overall index. So cereals, for example, up 10.7%, flour up 17%, bakery products up 11%, other bakery products like sweet rolls, coffee cakes, donuts up 10.7%. Interestingly, meat products have stabilized, if not come down outright. So we see pork decline by 2.9%. Bacon is down 9.8%. So either a huge increase in the supply of pork or people are just not eating bacon as much. Ham up 8%. Let's take a look at produce now. So milk on the whole down close to 1%, 0.8% on the year. Fruits and vegetables up 2.7%. Processed fruits and vegetables up 9.5%. So the organic stuff, I guess, is not going up as much as the processed stuff. Now, food away from home is an interesting one. You've got full-service meals and snacks up 6.8%. Food at employee sites and schools up 130%. Food at elementary and secondary schools up close to 300%. I don't know why food at elementary and secondary schools have tripled over the last year. If you are a worker at a school and if you know why, then please comment. If you're a parent whose child goes to school at elementary or secondary schools and you've noticed that you've had to pay close to 3 times, if not more, for lunch money, please comment as to why you think that may have happened. I will have to look into it myself, but that is nuts. Let's talk about shelter, which includes rent and rent equivalents. It's up 8% year on year, slightly down from last month's 8.1%, but this chart shows that it's still more or less moved up in a straight line since February 2021 and is rolling over much later than the rest of the CPI index. According to the BLS, the index for shelter was the largest contributor to the monthly all items increase, followed by an increase in the index for used cars and trucks. Now, a lot of this is simply because of data lags in collecting rental information, but a lot of this is also due to the fact that the shelter component includes owner's equivalent rent, which is obtained by asking homeowners the following question in their monthly surveys. If someone were to rent your home today, how much do you think it would rent for monthly, unfurnished, and without utilities? Obviously, this would depend a lot on mortgage rates, and so if the rates stay elevated, which they have so far, then owner's equivalent rent would also stay high. As rates fall, we can expect owner's equivalent rent to fall as a result. So usually for real-time rental and housing data, it's probably best to just look at listings in your local neighborhood and compare those prices to a year ago. And of course, breaking down shelter, we see that the rent of shelter is up 8.1%, the rent of primary residence is up 8.7%, and indeed, owner's equivalent rent of residences is up 8%, which is in line with the overall shelter index increase of 8%. Now, why is food and shelter so important to break down? Well, because the BLS has determined that the average consumer spends a big chunk of their income on food and shelters. The BLS has a measurement tool of weighting called relative importance, which represents an estimate of how consumers would distribute their expenditures as prices change over time. Here we see a visual representation of relative importance, with the purple bubble, services less energy services, being the biggest component, accounting for 58% of the consumer spending. And shelter is in that purple bubble, which accounts for exactly 34.6% of total spending. So given that non-energy services account for the majority of household spending, let's take a look at some of the biggest moving items. Health insurance declined by 20.5%. Car and truck rentals declined by 12%. Motor vehicle repairs up 20%. Insurance up 17%. Public transportation down 8.9%. Airline fares, interestingly, down 13.4%. For a full itemized breakdown of the CPI index, I'll put a link to the BLS report that came out today. So why is the overall CPI index coming down? Well, I'll be discussing this issue with experts on my show over this week and next, as there are several schools of thought on this. But for now, let me play you this clip of my interview with Steve Hanke, professor of applied economics at Johns Hopkins University, last month, in which we discussed the relationship between inflation and the money supply. Take a listen.
Inflation is knocking on death's door. The inflation story is basically over. That means by the end of this year, our forecast has inflation in the 2% per year to 5% per year. As you said, the headline number for March, just out today a few hours ago, is 5%. So we're already in the target zone.
I think a lot of people watching would like to understand how you arrived at that 2 to 5% target.
Something called the equation of exchange. And that's M, the money supply, times V, the velocity of money, equals P, the price level, times Y, the real GDP. Year over year, the money supply isn't growing at a plus 6%. It's contracting when it should be expanding at about 6%. So you know the inflation is going to be sucked out of the system. As Milton Friedman liked to say, inflation is always and everywhere a monetary phenomenon.
So that concludes today's report on the CPI numbers. Stay tuned for interviews with economists later today and later this week as we break down CPI in greater detail and we discuss what the Federal Reserve is likely going to do for the remainder of the year. As always, thanks for watching. Don't forget to subscribe and share this video.